Is Netflix, the industry leader in on-demand video, about to undergo a massive collapse? The streaming market has undergone a significant transformation and has now become a battlefield where numerous rivals are emerging. Netflix, the trailblazer that revolutionized the way we enjoy entertainment, is currently facing a challenging decision. Tonight, we will delve into the clues, reveal the gaps, and solve the mysteries that suggest the potential decline of a once powerful empire. Streaming services have become increasingly popular in recent years, with Netflix being one of the most well-known providers, boasting over 230 million users worldwide. However, popularity does not always equate to quality, and Netflix has undergone significant transformations since its establishment in 1997. Over the past decade, subscription video on demand has continued to gain momentum. Netflix, with a current net worth of $140 billion, has set the standard by transitioning from a mail-order DVD rental service to a full-fledged online streaming platform. Apple TV Plus was launched in 2019 and is projected to generate $9 billion in annual revenue by 2025, according to analysts at Morgan Stanley. Today, people across the globe watch television on a variety of streaming services, many of which are worth billions of dollars. Amazon Prime, for example, has over 200 million members worldwide. The adoption of streaming has also accelerated due to the COVID pandemic, which has forced many individuals to stay at home. During 2020 and 2021, the major platforms, including Disney+, Prime, and Netflix, saw a significant increase in membership numbers and stock prices. In 2022, people continued to consume more streaming content on demand than traditional broadcast TV. Netflix has been the leading streaming service for quite some time, much like Blockbuster was the leader in movie rentals. However, new rivals have emerged, presenting serious competition to the well-known brand. Despite apparent success, there are indications that things are not as they seem. Last year, Netflix experienced a decline in membership for the first time in 10 years, losing 200,000 customers in Q1 2022. This was a significant setback for the company, as they had set a goal of gaining 2 million new members in that same period. The company is expected to lose an additional 2 million members in the current quarter, which could be just the beginning of a downward trend. The market reacted harshly, and the company's stock price plummeted 25% in one day, resulting in a significant loss of value. After years of misleading investors, Netflix has finally acknowledged that it is acceptable for rivals like Disney, Hulu, HBO, Paramount, Peacock, Apple, Amazon, and many others to replicate its business model. Competitors have repurposed content from Netflix to run on their platforms. Additionally, it has been discovered that users are also utilizing other streaming services besides Netflix. Netflix has been presenting a positive picture of the company by arguing that a lot of people are still watching Netflix. According to a figure in the company's investor letter, Netflix's total TV time share in the U.S. has increased over the past year. It also includes a chart that illustrates the level of competition the business is up against. However, it is important to note that these rivals pose more than just a threat to Netflix, as they aim to steal Netflix subscribers' time and money. They are problematic because they remove content that Netflix previously had access to. In the past, Hollywood was happy to give Netflix access to many of its previous TV series and films, believing that not many people would pay to see that content online. However, the major TV and film studios have realized they were mistaken. Many of the original Netflix series have been moved to their platforms, such as Friends on HBO Max, The Office on Peacock, and all of Disney's content on Disney+. Furthermore, they are also competing with Netflix for fresh endeavors. As a result, Netflix has witnessed the disappearance of a significant amount of valuable material and has had difficulty spotting innovative new projects. While creating original programming was a game-changer for Netflix, the cost was high. From Stranger Things to The Crown, the streaming behemoth has spent billions producing original television programs and films. However, growing production costs and more competition have strained Netflix's financial reserves. In the race for original programming, Netflix has placed a significant bet. However, with the proliferation of streaming platforms, the bidding wars for production rights and talent have driven prices sky high. This has become a significant contributing factor to Netflix's financial burden. In the past 5 years, Netflix has added nearly 26 million new users yearly. However, they only attracted 18 million new users last year, and their projections show that they will add even fewer users in 2022. This is a significant decrease that questions the company's bullish premise. Netflix aims to attract tens of millions of new subscribers annually as more people switch from pay TV to online video. The company has positioned itself as a growth stock with investors, much like Google or Facebook. Over the past 10 years, Netflix has fulfilled its promise by expanding yearly and reaching over 200 million customers. The 10 years that ended in December saw an almost 6,000% increase in its shares. The business has recently reported a slowdown in its growth, but the cause is uncertain. It could be due to the epidemic, increased competition, or other factors. There are also concerns that the executives may be concealing information about their diagnosis. But historically, Netflix has been transparent about what they know and don't know. The market investors are worried about the stalling growth of Netflix's user base, which has compelled the company to explore new revenue streams. This is particularly crucial because revenue and profit growth are significant factors when the company's primary strategy is to grow its user base. Once upon a time, more people used to stream Netflix than all the cable TV networks in the United States combined. Netflix was the biggest film and television studio in the world, and their shows often impressed the audience. However, they are now facing challenges due to increased competition, a more discerning subscriber base, and the wokeism culture they allowed in their content and internal workings. They need to understand that the real world is different from the world of Twitter, where political correctness and virtue signaling are the only things that matter. Netflix was not prepared for the significant decrease in the number of its subscribers. However, even though the company is facing losses this quarter and the next, it remains to have the largest number of members compared to its competitors, with a total of 219 million. The good news is that Netflix will not struggle to fund its new series and films, because it is no longer burning billions of dollars annually and asking for fresh loans from Wall Street. However, the challenge remains that the company must find shows that will keep its subscribers entertained and satisfied to continue attracting new ones and retaining its current base. It will no longer be an easy task, and Netflix will have to put in more effort than ever before. The saying, "Go woke, go broke," may soon apply to this billion-dollar company, as Netflix's customer base has been declining, which could ultimately lead to its downfall if it doesn't change its course. Could the damage have already been done, or could they recover? If you found this video informative, don't forget to give it a thumbs up and share it with your friends. Comment down below with your thoughts and suggestions for future videos.